Hey folks, welcome to Tom's Trading Room. I'm Tom Gentile, America's pattern trader, and today I want to talk about the controversy around Cracker Barrel. And I want to talk about its stock because it's plunged 15% in the last week due to a rebranding backlash. Is this a buying opportunity or is it a sell signal? I want to also compare its performance to other casual dining chains since COVID. And I want to end with how you can get paid to get this stock a lot cheaper than it is today. So let's get started. So I waited a few days to put my opinion in the ring on this one, but here we go. Last week, Cracker Barrel unveiled a $700 million branding overhaul, ditching the old man logo and the old country store tagline for a more modern look. They're also revamping the look of the inside of the store as well as merchandise itself. And judging by the parking lot, it looks like they could also repave it since there's little traffic in the stores, according to some X posts. Now, CEO Julie Felsenfino called the feedback overwhelmingly positive, but that's based on focus groups. Social media has erupted in a different format with backlash. So over 500,000 X posts labeled it woke and predicted a Bud Light fiasco with boycott calls and demands for the CEO's resignation. The stock tanked 12 to 15% intraday on Thursday, closing down 7% at around $54.80, erasing a $200 million market value. Now, look at the bigger picture. This is not just branding. This stock's got some long-term issues. Cracker Barrel faces headwinds like declining casual traffic. It's also got rising costs. It also has competition from the fast casual spots, and the 5-year stock chart shows it significantly down from its multi-year highs of $175 a share. Fundamentals really kind of tell the story. Revenue's up less than 1% year over year. Income's down 58%. Analysts rate it as a hold. You know what that means with a stock. With a $55 target, suggesting minimal upside. The sentiment on X is, well, it's 90% negative, with predictions of further drops, even bankruptcy. Now, let's compare Cracker Barrel's performance since COVID to other names in its industry. Casual dining stocks, well, on average, they're up about 88% by mid-2025, but the winners and losers, well, they vary widely. Here's a quick table. Cracker Barrel sits at $53 from its lows in 2020, up just 3% since. But take a look at Cheesecake Factory, up 348% since its COVID lows. Darden Restaurants, up 702%. Texas Roadhouse, up 609%. But Brinker International claims the top spot as the symbol EAT, up over 2,000% since its lows back in 2020. And again, Cracker Barrel's up very little. This year, it's up only 4.5% versus EAT's 111% year gain. So maybe you're thinking it's not a fair comparison since all the other eateries didn't rebrand and also didn't take the heat from the public for it. So let's compare Cracker Barrel to what happened to Bud Light not too long ago. Again, bring up the table. You can see Cracker Barrel up 3%, but Anheuser-Busch went from its low of $35 up to currently $63. That's an 82% gain. Now, that's quite a comparison, but you got to remember, Bud Light's controversy was 2 years ago. Stock went from $66 a share down to $54. That was about a 20% drop during the time. Next drop happened after earnings and future expectations, but the stock never hit any multi-year lows following the backlash. So if you feel like Cracker Barrel is Bud Light 2.0 and it's approaching a value spot in bullish long-term, but wary of the dip, consider selling put options for income. This strategy obligates you to buy the stock at a strike price of your choice if it falls below, but you collect a premium up front. It's like getting paid to wait for a bargain. Suppose Cracker Barrel shares are at $54, selling a put with a 40 strike price, expiring around 90 days from now for, say, a $2 premium. You're pocketing $200 per contract. That's 100 shares of stock. If Cracker Barrel stays above 40, the puts expire worthless. You keep the premium, that yields about, say, 4% annualized. If it drops below 40, you're obligated to buy at 40, but your effective cost is $38. That's $40 minus the $2 premium. Cheaper, a lot cheaper than it's trading at today. This generates income while committing to a cheap entry. Now, if the stock plummets, you still own it at 40. Use it only if you buy Cracker Barrel anyway. So for Cracker Barrel, the volatility is high due to the backlash. The premiums are juicy. Check chains like Robinhood for up-to-date prices. And number one thing is do your own research. In summary, Cracker Barrel's rebrand flop and its weak recovery since COVID really sounds like a short-term sell, but long-term holders might want to watch for stabilization. Compared to its soaring peers, it has lagged. But selling puts offer income with a safety net. Now, remember, this isn't advice, so do your own research. Thanks for watching. Like, subscribe, and comment. What do you think? Is Cracker Barrel a buy, a sell, or a put? See you next time.